Welcome. In this video, ZBCN versus TON, which is better, and can ZBCN increase by 1930%? We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand.
But first, let's analyze ZBCN. An ascending channel structure is a strong and meaningful formation observed in technical analysis during periods when the price consistently forms higher lows and higher highs. This structure is defined by two parallel lines, the lower band, which acts as a support line, and the upper band, which acts as a resistance line. The price moves between these two bands, oscillating within certain cycles while adhering to the geometry of the channel. In the middle of this structure, there is typically a midline that acts as a psychological equilibrium level. In our current technical setup, the price has touched the lower band of this ascending channel and reacted upward, moving toward the midline. This development can be interpreted as a highly positive scenario, both technically and psychologically. The lower band is always considered a potential buying zone in technical analysis. These levels are areas where the price has previously found support and where buyers have stepped in to push the price higher. If the price has once again reached the lower band and bounced upward, this provides us with two key pieces of information. First, it shows that buyers are still strong and are stepping in again when the price reaches these levels. Second, it confirms that the channel structure is still active and valid, indicating that the price is adhering to this structure and behaving according to technical analysis principles. This becomes a source of confidence for investors as predictability increases and it becomes easier to plan strategic trades when price moves in a defined pattern. The price bouncing from the lower band and moving toward the midline is actually one of the healthiest bullish scenarios in technical analysis. In this scenario, the price has essentially rested, regained strength, and continued its upward movement. This also positively influences investor psychology. Especially experienced traders interpret these kinds of scenarios as a continuation of the trend and prepare to take advantage of new buying opportunities. This chain reaction helps drive the price even higher, as increased demand directly impacts price. This makes the potential move toward the upper band even more likely. The midline plays a key role here. The midline is usually the balance point within the channel. When the price reaches this line, there can be short-term hesitation, indecision, or slight corrections. However, if the price breaks through the midline strongly, it opens up the space toward the upper band and significantly increases the likelihood of the price heading in that direction. Breaking above the midline is often considered a critical breakout point where upward momentum will accelerate. This breakout sends a message to investors that a new bullish wave is beginning and increases the number of buyers in the market. As a result, the price action gains speed and the move toward the upper band begins. The price bouncing from the lower band and heading toward the midline can be read not only as a short-term rise, but also as an indication that the larger time frame trend is continuing in a healthy manner. For a bullish trend to continue sustainably, there must be occasional corrections, followed by buyers stepping back in. If the price keeps rising without pause, it can create a bubble effect, which is not sustainable. But if the price pulls back within the channel to the lower band and then rises again, this points to healthier, more sustainable growth from both a technical and fundamental perspective. There are several important strategic details that investors should keep in mind when dealing with ascending channel structures. First, the lower band is always a potential support level, so buying opportunities should be considered when the price approaches it. Second, reaching the midline unlocks the potential to move toward the upper band. At that point, investors should closely monitor whether the midline is broken. If it's broken with strong volume, this serves as confirmation of the bullish move, and the distance to the upper band becomes a technical target. Additionally, the volume accompanying price movements should be closely tracked throughout this process. Volume increases signal that price movements are more valid and trustworthy. Especially if the upward move from the lower band is accompanied by high volume, it suggests that this rise is not just a short-term reaction, but part of a longer-term and stronger trend continuation. On the other hand, low volume rises should always be approached with caution, as they can carry the risk of manipulation. The movement of the price from the lower band to the midline also becomes a fundamental reference point for many investors when deciding to increase positions, open new ones, or hold existing ones. This leads to an increase in buyers, a reduction in supply, and consequently a faster upward price movement. Furthermore, when algorithmic systems and institutional investors detect such structures, they may automatically execute buy orders. This causes the price to be supported by a broader base of investors and move higher. It must be remembered that technical analysis structures function almost like a common language among investors. Those who read this language correctly and apply it with discipline can identify and capitalize on opportunities more easily and effectively. In the current scenario, the price bouncing from the lower band within the ascending channel and heading toward the midline shows that the uptrend is continuing solidly, the technical structure remains valid, and the market direction is still upward. In conclusion, structures like this offer opportunities for substantial gains, especially for long-term investors. If the price is moving within a defined structure that is providing strong technical signals, predictability and strategic planning become easier for the investor. In the current situation, the price bouncing from the lower band and heading toward the midline indicates that the current uptrend is healthy and that a potential move toward the upper band is possible. This is seen as a highly positive and promising development for investors. As long as the price continues to move within this technical structure, the ascending channel formation remains strong and continues to be respected by the market. But we can't base decisions on the channel alone. Let's take a look at other metrics as well. Stay tuned.
On the chart, we can observe a notable structure, a bearish order block positioned just above the current price. These types of formations are defined as zones where strong selling pressure occurred in the past and where market participants collectively placed their sell orders. Specifically, these areas serve as significant resistance levels where short-term price reactions can emerge. In the current scenario, it is clearly seen that the price has touched this area for the first time and pulled back noticeably. This indicates that the bearish order block demonstrated its strength upon first contact, meaning the liquidity and selling pressure within the zone are still relevant. The first contact is typically a test. When the price reaches this level, the sell orders there activate and prevent upward movement. However, this does not mean the order block is impenetrable. On the contrary, in many technical analysis approaches, it is emphasized that the probability of breaking such resistance zones increases significantly on the second or third contact. Why? Because during the first touch, a significant portion of the large sell orders waiting in that area are absorbed. With this liquidity depleted, the next time the price reaches that zone, it is likely to encounter less resistance. For this reason, the second touch is often seen as a critical moment. The current scenario reflects a situation where the price has made its first contact with the bearish order block and then experienced some pullback. However, this pullback should not be seen as a sign of weakness. On the contrary, such minor corrections are a natural part of healthy market function. Price behaviors such as shaking out short-term players, gathering momentum, and clearing positions before breaking through a zone are normal mechanisms of the market. Therefore, it is more accurate to interpret the current retracement not as a breakdown, but as a process of consolidation. If the price returns to this bearish order block and breaks through it with strong volume, it would be an extremely positive development from a bullish perspective. Such a breakout not only represents the technical overcoming of a key resistance level, but also reflects growing investor confidence on a psychological level. Moreover, once this zone is broken, there would be fewer resistances ahead, allowing the price to rise more freely. Additionally, if the second touch results in a breakout, many of the sell orders in this area may trigger their stop levels. This could lead to what is known as a short squeeze. Traders holding short positions may be forced to buy to cover their losses, which contributes to even faster upward price movement. These types of short squeezes often lead to sharp price spikes, attracting new buyers driven by FOMO, fear of missing out, thereby reinforcing the sustainability of the rally. However, if the price fails to break through the area during the second attempt, it must also be acknowledged that the selling pressure at that level remains strong. Still, as with any scenario, maintaining an optimistic perspective is important. If the price pulls back again from this zone, it can be seen as laying the groundwork for forming a new support level. The price could then regain strength and break through the area on the third touch.
In technical analysis, the third test of a major resistance is often seen as a sign that the level is weakening and may soon be breached. Furthermore, this order block can be significant not only in the short term, but also for medium and long-term projections. If the price breaks through this block, there is often a psychological shift among investors. This comparison between ZBCN and TON offers a highly exciting perspective for analyzing potential transformations and value shifts in the cryptocurrency market. If ZBCN were to reach TON's current market capitalization, it would require approximately a 1,930% increase. However, for ZBCN to achieve such a rise, it must demonstrate significant progress not only in terms of price, but also in areas such as technological infrastructure, use cases, adoption rate, developer support, community size, institutional partnerships, regulatory compliance, and many other metrics. TON, the Open Network, is a blockchain project supported by Telegram, known for its high transaction speed and scalability. Thanks to its integration with Telegram, a massive social media platform with a large user base, TON holds significant potential. Therefore, the market cap that TON has achieved reflects not only its technological competence, but also the power of the brand behind it, its reach, and the engagement of its community. For ZBCN to replace TON, it must match or even surpass TON's success in these key areas. First, let's start with the price comparison. TON currently has a high market capitalization and continues to develop its presence in sectors such as decentralized finance, NFTs, gaming, messaging, and more, supported by a wide user base. For ZBCN to reach this level, its price would need to increase more than 20-fold from its current position. This 1,930% increase represents a major profit opportunity for investors, while also highlighting the need for ZBCN to significantly evolve in many aspects. To replace TON, ZBCN must first improve its technical capacity. This includes establishing infrastructure that supports high-speed, low-cost transactions, increasing transaction volume on its network, and maximizing blockchain security. Second, ZBCN must significantly expand its user base. One of TON's key advantages is that its users already exist within a massive platform like Telegram. This makes it easier for TON to reach new users and increases its adoption rate. Similarly, ZBCN would need social media integration, broad content creator support, or an ecosystem that enriches the user experience. This requires significant investments not only in technology, but also in marketing and community management. One of the most critical points here is that ZBCN must surpass itself. This doesn't just mean price increases. The long-term success of any cryptocurrency is directly linked to the vision behind it, the strength of its team, its roadmap, and its commitment to sustainable innovation. Third, ZBCN must offer a wide range of use cases similar to TON. TON is not just a cryptocurrency, but a full platform that supports many decentralized applications. If ZBCN remains merely a payment tool or a token with limited functionality, it will be impossible to replace TON. Instead, ZBCN must offer active solutions in DeFi applications, NFT projects, cross-chain bridge solutions, DAOs, and the gaming industry. Building such an ecosystem requires substantial investment, time, and strategic partnerships. Additionally, these applications must be secure, user-friendly, and scalable. Otherwise, technical failures could erode investor confidence and put downward pressure on the price. Fifth, ZBCN must improve its credibility among institutional investors. TON has received backing from major investors and funds, giving it a liquidity advantage. For ZBCN to follow a similar path, it needs transparent governance, regular audits, a professional team, and institutional partnerships. One of the key considerations for investors in the crypto world is the project's sustainability and ethical foundation. If ZBCN fails to build trust in this area, replacing TON will remain a distant dream. Sixth, ZBCN must establish a clear vision regarding regulatory compliance and licensing. TON has established legal frameworks in multiple countries and operates in accordance with various regulations. ZBCN must also place importance not only on decentralization, but also on legal compliance. To attract institutional investors and large exchanges, transparency, legal alignment, and financial reporting are crucial. These elements are essential not only for regulatory authorities, but also for maintaining investor confidence. Seventh, ZBCN must grow and effectively manage its community. Communities play a vital role in the success of cryptocurrencies. TON has effectively mobilized its large Telegram-based community to accelerate growth. ZBCN must also actively produce content on social media platforms, incentivize participation, host regular AMA sessions, and deliver value to its community. A token's success is not only about the developer's efforts, but also directly tied to community engagement. Therefore, a professional strategy in community management is essential. Seventh, ZBCN must establish a unique brand identity. TON's success is not solely due to its connection with Telegram, but also because of its brand strength and recognition in the industry. ZBCN must create its own story, provide investors with a compelling vision, and clearly share its long-term goals. This is where the idea of surpassing itself comes into play. For a project to replace another, doing the same things is not enough. It must offer more. In conclusion, for ZBCN to replace TON, it must overcome many technical and strategic challenges. While this goal may appear feasible on paper, it is quite difficult in practice. However, it is not impossible. If ZBCN improves across the board, enhancing its technical infrastructure, growing its user base, mobilizing its community, forming ties with institutional investors, and building a strong brand, the possibility of it replacing TON becomes realistic. If this occurs, we could witness a 1,930% price increase. Of course, this would result in substantial gains for investors, but it should always be remembered that such ambitious goals require significant responsibility, strategic planning, and long-term dedication.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analysis, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.